Novo Nordisk is like big pharma. They manufacture typically like originally diabetes medication, and now like the business is leaning more into Ozempic and Wegovy, like the weight loss drugs, but it's basically pharmaceuticals. And they're selling most of those into the US. Like the US is probably more than half of their market. But they are a mature company that is paying a dividend, currently a dividend yield of 3.2%. So if we were to go back to my valuation metrics cheat sheet, this will probably be in like stage 4 or 5, mature growth, or maybe even mature dividend player. And I would actually probably think about this one as being maybe like an industrials manufacturing kind of company. And so typically the kind of metrics in my cheat sheet that I would try and look at would be PE, price to earnings, and also I'd be looking at dividend yield, and then maybe some other sort of finessing metrics like inventory turnover, and return on assets. But let's just focus on PE, because I think that's if we know nothing, it's a good place to start when we look at a company like this. So we can see the PE, price to earnings, for Novo Nordisk today is 16.1. Let's just quickly explain, like you probably know what PE is. Let's just quickly explain exactly what PE is. So you've got, I'm going to use sort of simple language here. You've got like the value of the entire company, which is based on all the, everything it does and all the money it makes, and it sells stuff and it has to pay for those things. And if you look at we can actually do it in Fiscal.AI. If you go to the financials tab, you can look at the 3 financial statements, the income statement, the balance sheet, and the cash flow statement. So every company will have these 3 financial statements. And it's like a story. If you learn to read these numbers, it's a story, and you can see like in the last LTM, that's the last 12 months. So like the rolling year up to today, their revenue. So it's kind of like the sales, how much money they made, which in this case was give or take $312 billion. And then we can see the cost of goods sold. That's like,
actually, Badger, quick note. I wanted to say this before. The units here are in the what's it called? The Danish currency.
Danish krona, correct? Yeah.
Oh, on the same market cap on the first page, it showed it as 1 point something trillion. In US dollars, it's closer to 185 billion. So maybe click on the USD tab. Yeah,
exactly.
There you go.
Yeah, exactly. No, that's a really good point, because this is actually one of the things I like most about Fiscal.AI. It will do this translation from like the currency that the company does its accounting in, which in this case is Danish krona, but it will translate it to US dollars. Because we're about to compare Novo Nordisk to a couple of its peers, which are US companies or British companies. If you look at them all on like a like for like basis, like dollars is a fairly standard way to do that. So when we do that, yes, you're right. You can see that their revenue was 48 billion US dollars. And then the cost of goods sold was $7.6 billion. So that, like, simplistically, if this was a really young company, it's not, that would be an interesting way to measure it, because you'd look at what's called its gross margin. You'd be like, they sold $50 billion worth of stuff, and the raw materials cost them $7 billion. So that's actually a really healthy gross margin. Yeah, like an 84% gross margin. Like, it's like the excess money you generate from when you go from raw materials to the actual thing you sold. And as you work your way down the income statement.
Actually, Batch, well, quick point here. What I think one of the hardest things to do for every investor is to make the numbers mean something because they're relative. But sometimes it is pretty simple. Meaning, for somebody completely new to this and you tell them what's a good gross margin, well, I don't know. What is a good gross margin, right? If you think, for example, in the supermarket world, what is that? Like for every item you sell, you only keep 3% profit or something like that, because you can't, supermarkets are ultra competitive and you can't upcharge customers and so forth. But here, Novo keeps about 85%, 85 cents per dollar sold. So even if you don't know, relatively speaking, what's good, what's bad, you can say to yourself, 85 cents out of every dollar. That sounds pretty good, right? Like, something like that.
Yeah, no, you're absolutely right. Yeah. And it's a really important point. Like you can then, as long as you don't try and compare like a pharmaceutical giant with a supermarket, because they're apples and oranges, they're not the same thing. But you could compare one pharmaceutical giant with another pharmaceutical giant because fundamentally they're in the same business. And maybe they're even like direct competitors for certain product lines. And so you can usefully compare the gross margin of, say, like an Amazon versus a Mercado Libre, and you can draw some quite useful conclusions about that. Now, I don't want to, that was a good sidebar. I don't want to boil to death like the income statement. Maybe we do that in future episodes. I did just want to explain what PE actually means, because you can see as you go down the income statement, okay, you got your costs of goods sold, then you get to your gross profit, and then you've got expenses around having a sales team and having like R&D because you have to develop new drugs. And then you might have like administration, other kinds of expenses. Maybe you've got like CapEx, you have to go and buy like another warehouse or a manufacturing plant. Basically, think of all the things you need to do to run the business, and you start getting towards the bottom of the income statement. And then you might also have to pay like tax, and maybe you earn some interest on some money you have saved. Maybe you have some debt. There's all these sort of financial things that you do when you run a business as well. When it's kind of like you get to the very end, you get to your net income, and that's like truly like your profit. That's like true profit that the company has. It's the income net of everything else. And so the PE ratio is basically price earnings ratio is basically like the net income, how much real profit at the bottom line of the company generated versus its market cap, like the value of the whole company. And if we go back to that first page, like our quick hint sheet, right now, Novo Nordisk is 16.1 PE. So essentially, if you
Well, actually, sorry, that's the next 12 months.
Oh, sorry, yes,
right
yes,
now,
yes, good point. Yep.
it's 15.
50, correct. Yes, you're right. That's interesting that it's actually, I haven't spotted that it's lower on a trailing versus a next 12 months basis. I'll go and think about that separately.
Yeah.
But
Whatever.
Yeah.
Yeah. Oh, and since I already interrupted you, little side note, when we talk in everyday conversation, we will say things like, what's the bottom line? That's that's from the income statement. And that phrase top line means revenue. Literally what is the first thing you see is how much revenue is coming in.
Right.
Bottom line is after you take out all the other stuff, what's the essence here? What's the bottom line? Okay.
And let's remind ourselves, right? The bottom line is only that it's only really useful as a metric for a mature company because it's already built all of its factories and it's done all its investing and it's efficient and it's operating and it's like this smooth, like well-oiled machine. If it was a young company, that just wouldn't be useful because it's still going to spend a ton of money on maybe R&D and break into new markets and do weird things and maybe acquire other companies. When you're like a big behemoth that's like multi-hundreds of billions of dollars, it's unlikely or it's rare that you'll make an acquisition or, change the business fundamentally. But you're much more likely to do that when you're a younger company because you're still kind of finding your feet. So that's why like the PE ratio is really generally, everything here is a generalization, generally most useful to mature, big, established companies. Let's use that.
And if I may, another one of these sidebars, which I think for many beginners is not obvious. Because not everyone took accounting and not everybody looked at income sheets before. But when you are not making money, in other words, you're still in that, as Badger said earlier, build-up phase, and you look at that bottom line, you will often see numbers in parentheses. And when the number is in parentheses, that means it's a loss. So that means in that year, the company lost that amount of money. And that's why this is maybe setting you up. Uh, when a company is losing money, I don't actually know how the algos sometimes compute it, or sometimes they play games with this. So sometimes you'll see price per earnings not available because literally, if you're losing money, you're not earning something. So it's like you can't divide by zero. So they'll show just NA or something. But sometimes it shows a negative number, like negative 340. And that's a little confusing. But the point being is, don't worry about that ratio if in fact it's negative or in parentheses.
All right. So while you were chatting there, I just built live just a very simple chart for Novo Nordisk. And so if you're not on the YouTubes, like get on the YouTubes, because that's where we're like starting to show this stuff.
Get off your lazy bum and get on the YouTubes.
But essentially I've pulled some industry comparators. So I did a bit of research on the side just to say, like, who are the main competitors to Novo Nordisk? The really obvious one is Eli Lilly, because they're both competing for the same market around weight loss drugs. But also I just want some like big pharma comparables. So I've also just somewhat arbitrarily pulled in Pfizer and AstraZeneca. So we've got like 4 big names that are broadly like they're doing the same kind of thing. I know they're not exactly the same business, but they're in the same segment. So we can compare them. We can draw some useful ideas. And I've kept this really simple. All I've plotted is market cap, PE, and dividend yield, because these will tell us something about the story. Now, this is not by any means like the whole story to how you do a valuation for a company. There is so much art, and there are hundreds of numbers you have to dig into. You have to listen to the earnings calls and read the quarterly reports. But this is like one of the many things you do where you can start to get some piece of the story that you can then like slot into your understanding. So I'm just doing this stuff live, right? So I'm just what I want to do, I want to get to like a nice pretty picture where I can just see in outline, like the story of what's happening to these companies. So here we got them. I've put this as by metric because I've got 3 different metrics. In Fiscal.AI, if I set it a single panel, like it's unreadable. I've got like 3 metrics for 4 companies. So it's like 12 things here. You can't compare them. So I typically like to do it by metric because then I can look at each part of the story at a time. And we've got this in US dollars. So we're going to see like for like rather than local currency. My first part of the story is market cap. So Novo Nordisk is green in this picture. Might be a different color for you, but it's green to me. And if I go here, I can see the market cap of Novo Nordisk today is 260 billion US dollars. And I can see that actually that's pretty much equivalent to AstraZeneca. They're both about the same size company. And Eli Lilly are massive. They're like 3 times bigger. And Pfizer are about half the size. I'm just getting a feel of where they are in the market. But let's look at what's happened. Like actually, the other 3 players have all been relatively stable on a market cap perspective over the last, say the last year to 2 years. But Novo Nordisk has taken a pounding. That's like my green line. And the market cap has more than halved since its peak, which looked like directionally sort of June 2024. It was a $660 billion company. Today it's like a $240 billion company. So it's taken a massive hit. So the first thing we can infer is like, we have to ask ourselves why, why has the valuation bombed? And that's where you have to start looking at much more information, looking at the narrative. And there were good reasons. They basically screwed up their execution. They had this amazing opportunity with Wegovy and they made a bit of a mess of it in terms of execution. But, once we know that, we can then ask ourselves, well, what's coming up? And have the company address those issues? Or are they fundamentally thesis breaking issues? And that green line is going to keep going like south until the company's worth like next to nothing and it dissolves. And now we said we'd look at a valuation metric, so PE. So the reason I wanted to screen share this is if you're not on the YouTubes, like we've got our 4 companies here and a couple of them, my orange and my purple one, so Pfizer and AstraZeneca, actually had like massive PE spikes or troughs. So it makes it quite hard to see what the hell's going on. So I'm just going to like lock down the time frame and just report. I need to go a bit tighter. You can see what I'm doing here. I'm just going back to like the last 12 months, and I've literally just like zoomed to the most recent 12 months. So I can get just a feel of like the trajectory of the PE as a simple valuation metric and how Novo Nordisk is stacked up against its three peers. And we can see here, actually, like the whole sector has come down a little bit. Maybe AstraZeneca PE has increased a little bit over the last 12 months. But the other three guys, we can see here nice and clearly, like we used to be able to buy Novo Nordisk about a year ago for 28 times earnings. And now we can buy it for 14 times earnings. So notwithstanding everything else, it's like in some ways like half the value it used to be. And then because I'm looking at an investment like this in my own portfolio from the perspective of it being an income investment, I want to get a feel of the dividend yield and how that's the trajectory of that over time. So again, these are all actually mature dividend paying companies. And right now I'm getting a 3.2% yield if I own Novo Nordisk, and I'm getting less than that on the other two. But Pfizer is paying like a massive 7% dividend yield. So you might look at that and go, oh, well, clearly, if you want income, just go buy Pfizer. But you'd need to go and do a lot more work because you might be buying what's known as a dividend trap. Right. So there we are. I've just done a little bit of literally like surface level analysis just to get a feel of what's going on with Novo Nordisk. And the main thing I wanted to share here was not some big conclusion about the company, but just how you use a tool like Fiscal.AI to start to get some of these insights. And we could bring in things like gross margin. Well, actually, let's do it. I'm intrigued. Gross profit margin, because we saw that was pretty healthy for Novo Nordisk. I've got no idea how it compares to the other guys. Oh, look at that. Gross profit margin of 84%, which is actually broadly comparable to to Lilly and to AstraZeneca. For some reason, Pfizer, maybe it's a slightly different kind of business model, quite a bit lower profit margin. But that's actually nice to know that Novo Nordisk's profit margin is the highest and also seems to be like sustained highest, whereas the other guys have bounced around a little bit more. So that's actually, I would take that, notwithstanding anything else, I would take that as a fairly good sign.
Thanks for that, Badge. The main comment I have is that I want to say 85% of beginning investors, when they say, I want to buy a company because it's cheap, unfortunately, all they're looking at is the price, which tells you nothing. It literally, I don't know how to emphasize this more than when you see the cost of a stock, it literally does not tell you anything about how cheap or expensive it is. You need the relative comparison between how much a share costs versus how much money they make, at least in this world of mature companies. So, God, what was my point? Oh yeah, the point was that the very first step a beginner needs to take is exactly what you did. You not only call up the PE, but then you compare it to other PEs, and only then can you begin very roughly saying this is cheap or this is fairly priced or expensive on a rough cursory overview level. At least if you've taken these steps, you're not making a fundamental categorical egregious error of not knowing what you're talking about. So thank you. Yeah, thank you for that. May I now add the next layer?
Yes, please.
The lines you see here are lines I drew when we last talked about Novo Nordisk, which was several weeks ago. Actually, I could count the weeks ago because I could see the lines 1, 2, 3, 4, 5, 6, 7, 8. 12 weeks ago. So 3 months ago, I suppose now, when this was a topic of conversation. Here's the point. What you're looking at on the YouTubes is a weekly chart of Novo Nordisk. I think for long-term investors, weekly is the sweet spot when you're deciding what time frame to look at. That's because it's in between call it the monthly, very, very high level overview, and the daily where you could see more of the gyrations. And the weekly does give you a pretty clear shape, right? You could see the shape of this company's value. So I suppose 3 months ago, when I drew that blue arrow down, that was right when we had that big purple drop in price. And on that episode, I basically said, from the momentum perspective, from the trading perspective, you don't want to buy at this moment, because the momentum, if you zoom out the 20 weeks from that peak, it is clearly going down. There's the little jags, there's the little jaggedy jags, but if you're buying Novo Nordisk at that point, you are literally buying against the momentum of the market. So that's, I would say, a yellow/red flag. Like, you have to, I think the full statement I said is, you have to have a very clear reason where you are saying you know more than the market, and you very well might. So what is it that happened after I said I wouldn't buy this here? We saw that for the following, 4 weeks, I was wrong, because then you see the green bars actually kind of going back up. And at one point, see that orange box that I drew? Usually when traders draw on their charts, it's only a line. It's only a single line. And that line is meant to represent where is the bottom, which is called support, and where is the top, which is called resistance. And here, it's a visual thing. It's actually not complicated. All I did was zoom out, and I saw way back years ago, there was this area where the lines were kind of bouncing between. Badge, you could see that, right? From bottom to top, from bottom to top, and they were staying within that particular range until I can't actually see the date on this because I'm just using a snapshot I took, until there's the moment where that green line broke out of that orange box and then kept going. And you could see, as soon as it broke out, it kept going to the very, very top until the bottom again. So I drew that orange box because I could see, oh, we're back in the orange box again, which to my mind says odds are that we're actually going to be probably stuck in this box again until we either go severely below it or we get one of these green bars above it. And what happened was, interestingly, there's a little tricky thing, is that you could see one of the weeks after I made this chart, that green bar actually closed above, right? That is a dangerous, from the momentum trading spot, that's actually a dangerous moment, because you could be, in a sense, given false confidence to say, oh, we broke above that limiting space, and now it looks like Novo is actually going to regain its momentum and start trading up. But you'd be guilty of having itchy fingers, because you would technically need to wait one more week to make sure that that's confirmed. And what ended up happening is, the following weeks, it actually dropped right back into the box. And now, as of today's day, it's actually, that breakout did not happen. And so the momentum still, from my visual perspective, continues to be down/sideways. So were I to want to buy more of this, because I believe my own thesis, I would still wait until we got a close on the weekly price above that orange box, and basically 2 closes. And then I would start putting money in.
It's good. And I think we can link this nicely back to where we started today's conversation about know the game you're playing. Because when you have a long-term mindset, you have certain tools, and you have a short-term mindset, you have certain tools, and maybe you're a bit of a hybrid like yourself and you use all the tools. And then you can start to not only like identify and buy great companies, but you can also buy them at a time like a short-term period, you find the right entry time using some of these indicators, so that you hopefully catch a turnaround.